Everybody, this is the second lecture for topic 1 ACT 3110. This is the second lecture. You have watched the first lecture before. Okay, so just to refresh your memory, in the previous lecture, I have explained about firstly the definition of accounting. So remember, the simple definition for accounting is a process to analyze and record business transaction and to report financial information. That is the simple definition. The second thing I think that we have discussed in the previous lecture is the role of accounting or the function of accounting. So we have discussed 4 roles of accounting. Accounting is a language of business. Accounting is a decision-making tool. And number 3 is accounting can be used to create accountability and control. And number 4, I think accounting is an information system. And then after that, we have discussed about 2 main branches of accounting, and then 2 groups of users of accounting information. And the last thing that we have covered in the previous lecture is about the types of companies or type of businesses. So the thing that I have said in the previous lecture is like this. If you go out there, if you go to a town or a city, you will see many businesses. These businesses can be categorized into several categories. The first category that we have discussed last week is according to the business activities. So if we look at the business in terms of activities, we can categorize the businesses into 3 categories: service businesses, merchandising businesses, and manufacturing businesses. So I have told you that if I give you a list of 10 businesses, you have to know which one is service business, which one is manufacturing business, and also which one is the merchandising and manufacturing business. That is the thing that you have to know. Okay, in this lecture, we will see another category of businesses. So businesses also can be categorized in terms of ownership. Okay, see this slide. If we look at businesses, we can categorize them according to the type of ownership. So, in terms of ownership, businesses can be categorized into 3 categories actually. 3 big categories. Okay, the first one is sole proprietorship. The second one is partnership, and the third one is company. In Malaysia, we have a new type of business. It is called limited liability partnership. But I don't think it is very important to know about the limited liability partnership. We focus on 3 main category of businesses according to ownership only. First, sole proprietorship. Second, partnership. And then the third one is company or corporation. Okay, let's see. Okay, what is a sole proprietorship? Okay, a sole proprietorship is a business owned by one person. If you see a business is owned by one person, then that business is a sole proprietorship business. There are many examples out there. I think most grocery shop are owned by one person. So these businesses are sole proprietorships. Sometimes a restaurant is owned by one person. So it is a sole proprietorship. The restaurant is owned by one person, but the person can hire many workers. So if you see a business is owned by one person, then that business is called a sole proprietorship. Okay, so remember, sole proprietorship is a business owned by one person. There are several advantages and disadvantages of a sole proprietorship. If you want to start a business and then you start a sole proprietorship, then the main advantage is it requires low cost of starting and managing or organizing. It is very cheap to start a sole proprietorship. In Malaysia, you just fill several forms and you can start a sole proprietorship. Very easy. Very easy and quick to start and to manage. Very easy to manage because it is owned by one person. But it has several disadvantages. The main advantages are, first, most of the time the capital is limited. So the business is owned by one person, so the capital to start the business is always limited. One person does not have a lot of money most of the time, so the capital to start the business is limited. Second thing is the disadvantage of sole proprietorship is if the business is making loss, then only one person has to pay for all the loss. That is not good. Okay, that is about sole proprietorship. The second type of business, according to ownership, is called a partnership. Okay, a partnership is a business owned by several owners. In Malaysia, a partnership is a business owned by 2 to 20 people. Let's say in the future you have 5 friends and you think that all of you want to start a business. You want to open a restaurant. So you can form a partnership. A business owned by 5 partners. So the number of partnership in Malaysia is between 2 to 20, as far as I know, 2 to 20 people. Most of the time, professionals like accountant, engineers, architects, they always form a partnership business. Several individuals start a business, so they form a partnership. For a partnership, when they start the business, typically they share the capital. So let's say you have 5 friends, you want to open a restaurant, each of you contribute, let's say 5,000 ringgit or 10,000 ringgit. So 5 persons, you can get 50,000 capital. And then another thing is, for a partnership, most of the time, if the business is making profit, all the partners will share the profit. And if the business is making loss, then all the partners will share the loss. So a partnership also has several advantages and disadvantages. The main advantage of a partnership is you combine skills and resources of more than one person. So let's say you want to open a restaurant, you have 5 partners, maybe 2 partners good at cooking, another one partner is good in accounting, another partner is good at marketing, another partner is good at managing the finance or anything. So you can share capital. It is in this one is better than the a sole proprietorship. If you start a sole proprietorship business, only one person, you own the business, only one person. So if you cannot share skills, but if you start a partnership, you can share skills. Okay, so the main advantage of starting a partnership is most of the time you can have bigger capital compared to a sole proprietorship, because there are several people, they can share capital. But and then another one is this one. If you start a partnership, you can share skills, combine skills. But there are several disadvantages of starting a partnership. The first one is if the business is making profit, then you have to share the profit with your partners. The second thing is when you if you start a partnership, you form a partnership, and then sometimes it is difficult and takes longer time to make business decision, because when you want to make a business decision, you have to all the partners have to agree, otherwise you cannot implement the decision. So sometimes it difficult to get agreement between the partners. So that one. Another disadvantage of starting a partnership is if one partner exit the partnership, then you have to create a new partnership. So that one is not good, because it is maybe it takes time to create a new partnership. You have 5 persons, 5 partners. You start the restaurant after, let's say, 2 years. One partner want to exit the partnership because he want to run his own business, for example. So you have to shut down the existing partnership, and you have to create a new one. That is the procedure according to the law, I think, and regulation. So that is one thing. Okay, let's see here. Okay, this table shows the comparison between sole proprietorship and partnership. So first, in terms of member, a sole proprietorship is owned by one person. Partnership is owned by, according to Malaysian law, a partnership can be a business owned by 2 to 20%. And then capital contribution. Most of the time, sole proprietorship contributed by one owner, one person, but partnership, the capital is contributed by the partners. Liability, unlimited liability. Both partnership and sole proprietorship are businesses with unlimited liability. Unlimited liability means if the business borrow money from bank, and suddenly the business collapse or bankrupt or close down, bank can take the business asset, and also bank can take the personal asset of the owners. That is what we call as unlimited liability. Let's say one day you start a sole proprietorship business, and then you are not lucky, after 1 year you have to close your business. But your business has borrowed money from bank, 50,000. When you close your business, bank wants their money. So bank can take the asset of the business and also your personal asset. Bank can take your house, your car, etc. Same goes to partnership. Let's say you have a partnership, after several years, you have to close down the business, the situation is not good, but the partnership has borrowed money from a bank. Bank can take the business asset and also can take the personal asset of the owners, of the partners. That is what we call as unlimited liability. Okay, in Malaysia, for a sole proprietorship, there is no specific law or act related to a sole proprietorship, but for partnership, we have Partnership Act 1961. Okay, number 5. In terms of legally, the for a sole proprietorship, the business and the owner uh, is the same entity. It means that if you start a sole proprietorship and one day somebody a customer sue your business because of a problem. When somebody sue your business, it means that that person sue you as the owner of the business. Let's say you same with partnership. Let's say you start a partnership, you start a restaurant named Restaurant ABC. One day a customer is not happy, the customer sue your business. But legally, the customer sue you, the owner of the business. Okay. Agreement. Agreement, a sole proprietorship, no agreement because it is owned by one person. But partnership, when you start a partnership, you have to write an agreement between the partners. So, and then number 7, type of business. You see, these are the businesses that typically related to sole proprietorship and partnership. Okay, that is about the difference between sole proprietorship and partnership. Okay, let's see. Now we see the third type of business. The third type of business is called company. Company, the simple definition of a company is a business owned by shareholders. Okay, in Malaysia, it is companies are subjected to Malaysian Company Act 2016. This one is an old one. Now we have Malaysian Companies Act 2016. A company is a separate legal and taxable entity. So it means that a company is a separate legal and taxable entity. It means that a company is not a legal entity. Sorry, a company is a legal entity. Remember about the sole proprietorship and partnership. I have told you that if you start a sole proprietorship and partnership, if somebody sue your business, you as the owner of the business has to go to court. When somebody sue a sole proprietorship or a partnership, it means that that person sue the owner of the business. But if you start a company, if somebody sue your business, it means that the company, the person sue your business. Your business will be brought to court. For example, when the case is mentioned in court, it will say that person A versus company ABC, not versus the owner of the business. No. Okay, remember that. A company is a legal entity. It can be sued in court, and also a company is a legal entity. The company can purchase assets and sell assets. The company can own assets. Okay, and then the second thing is a company is a taxable entity. It means that a company has to pay tax. If you start a sole proprietorship or a partnership, both are not taxable entity or tax entity. If you start a sole proprietorship and then your business does not have to pay tax, but you, the owner of the business, will have to pay tax. Same like a partnership. If you start a partnership business and then the business make profit, the business does not have to pay tax, but you, the owner of the business, will have to pay tax. But if you start a company, if the company is making profit, then the company has to pay tax. So this is what I said. A company is a legal entity or legal bodies. A legal body. It can own asset, it can borrow money, it can sign contract, it can be sued in court. Okay, so a company is a business owned by shareholders. In Malaysia, we have two types of companies. Okay, the first one is limited liability company, or we call it Sendirian Berhad, and the second one is called public limited company. Limited liability, private limited company, and public limited company. Public limited company is called Syarikat Berhad. Private limited company is called Sendirian Berhad. A public limited company, the main difference between these two types of companies is this one. Public limited company, most of the time, their shares can be traded in Bursa Malaysia. Okay, I think you have you have watched business news. When you watch business news, one of the things that is mentioned in the business news is about the share price. Share of these companies increases, like share of Asia increase or decrease, share of Petronas increase or decrease. So these shares are traded in Bursa Malaysia or Kuala Lumpur Stock Exchange. So Malaysian Stock Exchange. So these companies are Syarikat Berhad or public limited company. Their shares can be traded in Bursa Malaysia. But there are also companies, but their shares are not traded in Bursa Malaysia. So these companies are called private limited company or Syarikat Sendirian Berhad. So most of the time, Syarikat Berhad are bigger in size and capital and profit compared to Syarikat Sendirian Berhad most of the time. But not all the time, most of the time. So you can see there are the differences here. The main difference is in terms of members or the owners. Remember, companies are owned by shareholders. So, but for Syarikat Berhad, normally it is owned minimum by 2 person, by 2 shareholders. That is the minimum. That is the minimum. But I hear now 1 person can start a public limited company. That's what I heard according to the new Companies Act. But you have to know this one. A public limited company, the number of the shareholders or the owners is unlimited. Anybody can purchase shares of a Berhad company. You can purchase Petronas shares, Asia shares, etc. and at any time in the Bursa Malaysia. So the number of the shareholders is unlimited. But for Syarikat Berhad, the minimum is 2, the maximum is 50 shareholders. So that is the main difference. Other than that, most of the time they are very similar. Okay. So for a company, most of the time the owners of the owners of the company are shareholders. So they have shares. But most of the time they will hire manager to manage the business. That's why the name of the highest manager in a company is called CEO, Chief Executive Officer. You have to read about this, I think. Modern businesses or companies, they are owned by people who have money, people who can buy or purchase shares, but the business is managed by managers. The highest level manager in a company is called a CEO, Chief Executive Officer. Under CEO, there are several more managers. Okay, so now, why do you think you have to know the type of businesses. Firstly, you have seen that the businesses can be categorized into sole proprietorship, into service business, merchandising business, and manufacturing business. And the second category that you have seen here is businesses can be categorized into sole proprietorship, partnership, and companies. Why do you have to know this? Because you have to aware that accounting record for different type of businesses are different. So accounting record for a sole proprietorship is simple compared to accounting record for partnership, because the business, the sole proprietorship business, is small and owned by one person. It is the accounting record is simple. Partnership most of the time is a bit bigger and owned by several individuals, so the accounting record is a bit complex. Companies are big business. Companies are big businesses, so the accounting record is very complex, difficult to do. A sole proprietorship is owned by one person. A service business is simple because a service business does not sell anything, so the accounting record is simple. A merchandising business is a bit complex because a merchandising business purchase finished product and sell product to customer, so the accounting record is a bit complex. But manufacturing business, the accounting record is always complex because because manufacturing business purchase raw material, process the raw material, and sell finished product, so the process is complex, so the accounting record is complex. In this course, you will learn a very simple accounting, and that accounting is you will learn about accounting for a sole proprietorship service business. So very simple. You will learn accounting for sole proprietorship service business. Thank you very much. Do not forget to write your metric number in the comment section so that I know who have watched this video, and I will take it as the attendance. If you have anything to ask, and you can write your question in the comment section also. Thank you very much.